Joining us now to discuss the health of the U.S. consumer after today's jobs report and high inflation that we're seeing. We'll bring in our panel, Aadil Zaman, partner, Wall Street Alliance Group, and Matt Miskin, co-chief investment strategist at John Hancock Investment Management. Aadil, I'll start with you. So they're spending, folks are spending, but do you see strength or weakness here because we have inflation, we have gas prices, sentiment is low, but the consumer is sort of staying alive here. What are your thoughts?
Yeah, great question, Nicole. Great to be with you. So consumers are still spending. That's what we are seeing. They're spending on different things, but they're still spending. So for example, they're spending less on televisions. They're spending more on luggage, right? We're also seeing that consumers are currently also spending less on goods and more on services, such as travel. And the upside of sell-offs like this is that a lot of times some of the good company stock prices also come down with some of the bad company stock prices, and that's where it creates opportunities. So we are focused on capitalizing on those trends and buying some companies that have come down for our clients.
Yeah, I want to get to your stock picks in a minute, but first let's hear from Matt. Matt, your thoughts here, what the trends are, particularly how they relate to these consumer staples numbers that we've been getting into.
So out of the top 11 sectors in the S&P 500, consumer staples had the highest beat rate in earnings in Q1. So 90% beat rate, pretty impressive actually, but it also I think shows where we're at in the earnings cycle. Earnings growth is decelerating, and those companies that are in things that people want, or excuse me, things that people need versus what they want are doing better. So what we're seeing is, even though there's an inventory build in some of the retailers, we're seeing beverage companies have really good earnings results. We're seeing some of the other parts, parts of the staples market actually hold up really well. And as the economy slows, which we do believe is going to happen over the course of the year, consumer staple earnings are likely to hold up better. And in our view, that's why we think it's going to be an increasingly attractive part of the U.S. equity market as the year goes on.
Yeah, what they need versus what they want, because consumer discretionary has been a very poor performing sector in 2022. To your point, Matt. Aadil, tell me about the names you like here. You have Home Depot, Tesla, Booking, and Amazon.
Yeah, so we think that a lot of these stocks have come down and there's opportunity over here. We like Home Depot because most of the stock's down more than 20% year to date. So we see there being an opportunity there. Most of their customers are homeowners who've seen the value of their equities in their home skyrocket. And now as mortgage rates are going up and home prices are going up, rather than traveling and buying a different home, they're staying put in their homes and they're upgrading and they're remodeling. And for that reason, they're spending on this. And we feel that Home Depot is going to continue to benefit from this trend. We also feel that people are traveling now, right? And Booking Holding is a big beneficiary of that. People are just, during the pandemic, they were exhausted of not being able to travel, and now they want to splurge on traveling. And not only that, they want to travel internationally. So we are seeing cross-border travel pick up quite a bit. And Booking Holding is a big beneficiary of that because 90% of their revenues come from, and bookings come from outside the United States. So we do like Booking for the travel exposure.
Yeah, understood. Makes sense. And Matt, as some of the trends that you've been seeing, you have food and beverage. They could be one, food and beverage. And then there's personal care, personal items at home or whatever that you might need. Are you seeing trends? I don't think you have specific stock picks, but are you seeing that some are better than others as you see beats in the group?
Yeah, I mean, in terms of personal care, that had some of the best earnings results so far. And what you think about it is, we're now going back out. We're going back out and you think about the beverage companies, you've got some of the beer and spirits makers, those are seeing great earnings. So we're going out, we're getting our our Friday nights out, and we're getting dressed up, and I think that's personal care. And then there's the the beverage part. But in terms of what's most defensive, and if you think about, going into a slowdown or even a potential recession into next year, we look through all the consumer staples industries, and the food products are the most defensive. They're the most negatively correlated to the economic data. So they hold up better in terms of their earnings than when the economy does worse. So the food products would be actually the root focus.
Very interesting. And last but not least, Aadil, just an expanded thought on Tesla. Obviously, Tesla's in the news every day of the week. Do you think at 600, 700, 800, when do you think it's a buy? When does it stop being a buy?
So, Tesla is not immune to the problems that the economy is having, but that doesn't change the fact that it's a great company. And we think that it is an opportunity. The stock is down more than 20% year to date. We are going through, the great thing about Tesla is that they don't have a demand problem, right? They have more demand than they can fulfill. So for them, it's all about improving manufacturing processes, which they have been doing well over the years. And we feel that there's this huge movement globally towards electrification that is going on right now. And Tesla has about 20% of the global electrical vehicle market share. So we think, again, this is one of those examples of great companies coming down in price and creating opportunities.
Yeah, without a doubt. Thank you both very much for being here with us. Aadil Zaman, partner, Wall Street Alliance Group, and Matt Miskin, co-chief investment strategist at John Hancock Investment Management.